Welcome to our Tulane University Berken Road Report's initial coverage of The First Bancshares, Inc. My name is Jed Vorhoff, and I will be representing my teammates Manny Farrow, Mark Hayden, and Daniel Medina. The First Bancshares is a bank holding company operating along the Gulf Coast, and we give the company a rating of market perform with a 12-month target price of $17 per share. Our methodology included the use of price to earnings and price to tangible book value multiples, as well as analysis of discounted cash flows. Over the course of our presentation, we will first discuss the valuation methods we used, then we will provide a company overview of the First Bancshares, followed by a presentation of our investment thesis, and finally we will provide our main conclusions for the company's forecast. A review of the 5-year stock performance chart shows that the share price has risen from $9.45 in 2010 to $16 in 2015. This rise is equivalent to a 69% increase, as the First Bancshares has exhibited a strong recovery since the 2008 financial crisis. Our team projects a continued rise to $17 per share over the next 12 months. We will now discuss our valuation of the First Bancshares. Our team used 3 different methods to forecast a 12-month target price for the company. We used 2 relative multiple methods adjusted for financial institutions. These included price to earnings and price to tangible book value. We also used a discounted cash flow method. For the first 2 methods, we compared fundamental financial ratios of the First Bancshares to those of its peers. With the price to earnings method, we found a $12.69 price. The price to tangible book value method gave us a target price of $21.57. For the discounted cash flow method, we forecast 5 years of cash flows and calculated a terminal value using a 3% growth rate. We brought the cash flows to present value using a weighted average cost of capital discount rate of 11.51%. This DCF method gave us a target price of $16.06. Once we had the results of all 3 methods, we averaged the target price, having a result of close to $17. The First Bancshares is headquartered in Hattiesburg, Mississippi, and is traded on the NASDAQ Stock Exchange under the ticker symbol FBMS. The First Bancshares' wholly owned subsidiary, The First, a national banking association, is a community bank with over $1 billion in assets and 31 locations spread across coastal Mississippi, Alabama, and Louisiana. The company currently has 5.38 million shares outstanding, with a market cap of about $86 million. In selecting an appropriate peer group for our analysis, our team considered financial institutions with a similar geographic presence and loan portfolio construction to the First Bancshares. Our determined peer group consists of Renaissance Corporation, Mid-South Bancorp, Home Bancorp, Citizens Holding Company, and Auburn National Bank Corporation. The First Bancshares offers a wide array of deposit services for clients at both the personal and commercial levels. Available checking accounts include low-cost options without fees, as well as premium offerings. The company also provides targeted offerings for specific customers, including checking accounts with increased identity theft protection for risk-averse individuals, and special benefits for nonprofit organizations and sole proprietorship business entities. The company offers a diversified set of loans to cater to both its individual and commercial clients. Individuals' options include home mortgage, real estate, home equity, home improvement, auto, boat, mobile home, and other consumer loans. Commercial entities can apply for loans to finance accounts receivable and cover costs associated with commercial real estate, construction, raw materials, machinery, and equipment. As of September 30th, 2014, non-farm, non-residential loans accounted for the largest portion of loans outstanding with 32.5%. Residential mortgages made up 26.5% of loans. Now we will summarize our investment thesis. The First Bancshares has succeeded with its acquisition strategy in recent years. Since 2011, the company has tripled the quantity of locations and doubled net income. Company management has stated its intention to continue expanding within the tri-state area. If federal regulations increase, this may hurt the profitability of financial institutions. A potential silver lining exists, however, in that financially weaker banks should feel the strain first, which might create additional merger and acquisition opportunities for the First Bancshares. Macroeconomic indicators, such as the U.S. unemployment rate, show that the American economy has recovered well from the 2008 financial crisis. Improving economic conditions increase consumer confidence and position financial institutions to grow out their loan portfolios. Company management has acknowledged a desire to increase its loan-to-deposit ratio from 78% to 85%. This intention portrays an immediate opportunity for the First Bancshares to grow its revenue. Company management has invested primarily in short-term bonds in preparation for if the Federal Reserve Board were to raise interest rates. When this occurs, the First Bancshares liquidity will enable the company to reinvest its reserves in higher-yielding long-term bonds. And finally, falling oil prices are an obvious concern for most Gulf Coast financial institutions. The First Bancshares, however, is not very exposed to said industry, which should position it favorably compared to its peers. Our team concludes that the First Bancshares share price is currently undervalued at $16 per share. Considering the company's proven management team, its focus on continued expansion, and history of conservative investments, we predict a 12-month target price of $17 per share. And with this 6.25% projected increase, we give the company an investment rating of market perform. Thank you for watching our presentation of the initial coverage of the First Bancshares, Inc. as part of Tulane University's Burken Road Reports program. For more information on Burken Road Reports, or to read our entire investment analysis, please visit www.burkenroad.org.